Greetings. Welcome to my weekend market recap, 26th March 2022. Let me know if you can hear me. Let me continue. You may use the chat panel to let me know if you can hear me. I conducted the class a while ago, but the audio was not audible, so I'm carrying it out again. I hope the audio is okay now. I'm moving house from near the sea beach to a village. I'll show you some pictures of the village. But let's start. The slides are the most boring part for me, but I have to go through them. I'm Sagar Nandi, retired IT professional, swing trading stocks using Q systems and techniques. This is my email ID. I regularly share live market and stock analysis on my channels. You may follow them. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You are solely responsible for the outcome of your trades. I may mention about options trading from time to time. You may refer to the characteristics and risks of standardized options document from Options Clearing Corporation to see if option trading is suitable for you. I use Q systems and more concentrating on only one platform, and the one platform that provides everything I need, data and charting platform, scanning platform, is Metastock. These are the Q systems. Now I mentioned I am moving to a village. This is my Facebook page. In Asia, when people build a house, before starting building the house, they usually offer prayers. And this is the farmer couple. This is the land where I am making a house. Decided to live in the village. This is the prayer, and after that, they started building the house. I am moving from the sea beach to the village. I may go there next week. The construction is underway. Very simple, humble house, but it's a home. With that, let's start looking at the market, starting with Australian index, all ordinaries. I'll go through the analysis quickly and then spend probably more time on looking for possible trades. All ordinaries bullish in weekly, significantly above swing low in daily, close to the upper boundary, not at a low risk entry point, though it is bullish. Notice few things. Once again it hit jump thrust low, and immediately after that it gave a big move up 3 bullish momentum signal. Those were the days you could start to look for buying stocks which had proper Q trade setup. I mentioned that because of one question one of the Q traders asked me about how to find opportunities that could be held for longer term. One way is to look for stocks that are at jump thrust low. Another way is of course to use stocks at price extreme low and reversing, and using that price extreme low and reversing, or at price extreme low and giving Q long trade setup. I found a stock this week that was AT&T. I will walk through the steps later. Whenever you see jump and thrust hitting extreme low, you may look for buy setups in individual stocks in that market. Let's see what is the situation for Japan's Topix index. And thanks, John, once again for confirming the sound. This is not topics. Let's get this proper symbol. Okay, topics. Topics similar to all ordinaries, bullish for 2 weeks. In this case, though, price is right near the trend line resistance in weekly, daily, and we have a bearish headwind signal in daily. So my preferred trading direction is actually bearish. If I did not have the Q signals, that is bearish headwind, and I did not have these automatically drawn trend lines, my directional bias would not be bearish. But I have those signals and I'm using them very well to have a preferred trading directional bias as bearish in Japanese market now. CSI 300, very much different from Australia and Japan markets. The weekly is coming down sharply, made a recent low, recovered, and then on Friday we have a bearish flow. Lower high, lower low, bearish flow, weekly backdrop bearish, daily candle bearish. Meeting all the requirements of bearish flow setup. So I am happy to take short trades in the China market now. UK Footsie Index. This is similar to Australia and Japan markets. Weekly going up for few weeks. Daily recovered, has bearish indecision at the top. Notice this unique Q signal also. Right at the bottom we had bullish indecision and jump and thrust low. Once again we could combine those signals to start to buy right at the bottom when everybody was bearish. And if you followed my shared ideas always before knowing the results, those were all long trades I was taking from that point onward. Now we have the opposite signal, bearish indecision at the top. If price can go below Friday's low, then I may start to look for short trades in UK market. And India's Nifty 50, not as bullish as Australia, Japan, or probably even UK market, because though the weekly backdrop is bullish, this week's shape is bearish. This week closed lower than previous week. We know that from the red activity bar in weekly. In daily, it is inside a range. If price breaks out to the upside, I'll look to buy. If price breaks down to the downside, I look to short. Until it breaks out in either direction, I am not going to trade. That was a look at the global markets. If we wanted to know the global market as a whole, then we can use the global index, custom index in Q market breadth. Recovered from swing low. We have a bear release on Friday. That is bearish. For the whole week, it's almost not moving anywhere. And though we have a bear release signal, there is a trend line support. So I'm not going to short now. If the trend line support is broken, then I'll be happy to short. That is an if that trend line is broken. This trend lines works very well. These trend lines work very well. Therefore, breaking of trend line is also significant. The breakout setup is based on that. That was a look at the global markets. Let's look at the USA market using the market ETFs. And you may notice how smoothly I am changing symbols or templates or layouts for technical analysis, and also transitioning from technical analysis to fundamental and industry analysis. QQQ went up for 2 weeks in a row, and notice the signals. The more you observe the signals, more you will be able to use them in real time. On this week, we had a bullish indecision. Price never breached the low of that week. That low created watermark pivot. We had bullish headwind reversal signal at the same pivot level and price went up. Using those signals, we could start to buy right at the bottom, which would be somewhere in this area in the daily chart. Now price has recovered from the swing low. We have a bearish release and then a bearish indecision. So I'm not going to buy QQQ as of Friday's close. Also, if you look at the relative performance, it tilted down on Friday. Earlier, it was going up. So QQQ tech stocks were outperforming for a while, and on Friday they underperformed again. That's a reason to be cautious buying tech stocks. Now, remember, right at the bottom, I started buying some tech stocks and shared them on my website, including PayPal and Facebook. Both of them has hit the profit target by now. Now I'm using the Q signals again to be cautious on tech stocks. Later on, we'll look at market breadth of Nasdaq and NYSE and see if this relative weakness of technology stocks is confirmed from that market breadth analysis. Before looking at market breadth, let's look at the other market ETFs. SPY. For 2 weeks in a row, it went up. In daily, it went up from the swing low. This is looking stronger than QQQ because on Friday we have a very bullish close, bullish flow as well. Though it is significantly above swing low, so using Q guidelines, there is no low risk entry point. I could have bought here. I don't like to buy at swing high. It is looking bullish. Industrials ETF DIA. Not as bullish as SPY. Remember just now we saw SPY had a bullish flow, bullish color on Friday. DIA has yellow color and we can see the relative performance coming down. Weekly is bullish, however, it is weaker than SPY. And small cap ETF IWM. Here also relative performance is tilting down, so small cap is doing worse. And the relative weakness of small cap I explained in the previous recap also using the market breadth, small cap versus large cap plot. I look at that today also. Here I can see small caps are underperforming. For the week, it almost didn't go anywhere. If you look at the weekly activity bar, weekly actually closed lower from previous week. Backdrop color is bullish, but if I had to buy any of the market ETFs as of Friday's close, I would have selected SPY. If I had to buy, I did not have to buy and I did not take any long position in SPY. I did buy some other stocks. I look at them. Let's look at the market breadth now. From the market ETFs, my conclusion is market is bullish, however, not at a low risk entry point. Now let's look at the extremely useful market breadth total view. Right when I saw the Phoenix at a low price level, followed by a bingo, that is sell everything even of value, baby out of bathwater. The signals are thanks to Ian Woodward, may him rest in peace. Right at those points, I mentioned in live webinar that you could look for exhaustion. Right after that, we had an accumulation count of 2. That was significant. Right after that, another accumulation count of 4 and also an Eureka signal. That was the perfect time to buy. Since then, price has gone up. Every trade I initiated right at the bottom has hit profit target by now for swing trading. On Thursday, we have again another accumulation count. Friday's candle is also bullish in shape. What is this candle chart? It is a custom index using the different major indices. It is looking bullish. If we look at the 3-month new high low, that is in the upper half but not at the extreme level. That is also bullish. If we look at the percentage of stocks above 50 MA, when it was here, I showed it was moving inside a range and then mentioned that we could look at the breakout direction, which had been to the upside. Now it has clear higher high, higher low, that is bullish. It has not hit the possible overbought 80% level. So all the signals from this market breadth total view is bullish and not overbought. If I look at market breadth of Nasdaq versus NYSE, let's look at the yellow line, percentage of stocks above 50 MA. Nasdaq is just below 50%, NYSE about 60%. So NYSE is once again outperforming Nasdaq from this angle by about 10%. Both of the yellow lines are going up with higher high, higher low. So we have bullish picture from both Nasdaq and NYSE, though Nasdaq is weaker than NYSE, and this is confirming the weakness we saw in QQQ, which was underperforming SPY. If we look at the mega caps, okay, before that, let's look at the small cap versus large cap plot from market breadth total view. Small cap versus large cap, cyan line, it was tilting down in last weekend recap and it is continuing to tilt down. So small cap is underperforming. Again, that is confirming what we saw from IWM chart. IWM is an external view and this is an internal view. If we look at growth versus value, the magenta line, that was going up and I was buying some growth stocks when it just started to tilt up, including PayPal, but on Friday it tilted down a little bit. So on Friday we saw a relative weakness in technology stocks and a relative weakness in growth stocks. So we may be cautious once again about those stocks. If we look at mega caps using custom index, had a nice recovery from the triple bottom, considerably above the swing low and close to trendline resistance, has two bearish indecision in 3 days and 3 bearish indecision in 5 days. I mentioned in the master classes, if one bearish indecision or bullish indecision is there, we are careful, and when a cluster of them happen together, we are even more cautious. That cluster came here as bearish indecision, came here also, now coming here. That is not a trade setup. We'll only short if we have proper trade setup, but these are early warning signals that are very valuable. Looking at the mega cap custom index, I am not going to buy mega caps now. So what is the conclusion from this analysis? Market is bullish. There is no oversold signal. Sorry, not no. There is market bullish. There is no overbought signal. So I'm not going to look for shorts. However, maybe cautious and buy stocks that are in appropriate industries, probably non-tech stocks, and may avoid small caps. Let's see if that bullish view is confirmed from sector industry stock breadth. This is sector industry stock breadth, sector industry stock 1 month to 1 day. Extremely valuable in anticipating where market is going, not only to see where it is now. Now all the charts are green, predominantly green. Longer term, 1 month, 10 days, clearly bullish. Shorter term, 1 day, 2 days are clearly bullish. In the middle, neutral, but slightly more bullish than bearish. A while ago, all or most of these pie charts were red. That was an oversold situation, and from then I started to look for buying. Now I would have started to look for shorting if 1 day period was red, but it is not red. So it is looking bullish and there is no sign of weakness to start to look for short trades. Let's see if bucket analysis confirms that. Bucket bar graph is bullish, more green than red, and the percentage of stocks in the uppermost bucket is at just 8.5%, nowhere near the overbought situation of 30-40%. It has long way to go before it becomes overbought, and it is bullish because 75% of the stocks are above mid Bollinger Band. So it is bullish but not overbought, so we may continue to buy. Let's see if all these are confirmed by the very useful technical analysis. Very useful once again because we only make money buying stocks if they go up. So technical analysis is always important. Let's look at the weekly picture first. All signals 71% bullish, trend signals 84%, trend continuation 75% bullish. Reversals more bearish, however the absolute number of reversals are much less compared to gap ups. So together here strength signal and reversal signal, they are continuing to be bullish, not bearish. Everything is bullish. Do we have an alert level of bearish headwind in the weekly signal? No, only 0.1%. So no alert. Weekly picture is bullish. Daily Friday's picture, all the charts are bullish again, except reversal signal. But once again, reversals in absolute number is much less than gap up. So together, strength and reversal are not bearish, but that is also bullish. So we have a bullish picture in the daily interval as well. Is it overbought? Remember, from technical breadth also we may assess overbought condition. And not all of these I have time to mention in every recap. You may watch the master classes from time to time. We look at the percentage of bullish signals coming from price extreme high. If that was the area from where most bullish signals came, then it was overbought. But now most of the bullish signals are coming from price extreme middle. That's neutral area. That is a sign of healthy bull market. So it is telling us it's bullish and not overbought. We may continue to buy. And that brings me to the question one gentleman asked, how to look for buying opportunities not only for swing trading but longer term investing. And he was thinking of looking at the fast bullish backdrop after number of weeks. That is too roundabout way. There is much easier way, and the suggested guideline is, and let me carry out that analysis right now. Technical breadth is also bullish, so let's look for bullish trades. So I'm going to the bullish signals, and remember these paint brushes, they help us find signals from different price levels, price extreme low or middle or high. I'm going to look for price extreme low signals, look for trade setups, look for breakouts. And AT&T is one stock I found from there. Let's look at AT&T. And I shared that trade actually on Friday on my website, sagarnandi.com, under 360 degrees trading ideas. Let's look at the analysis. Can you identify this stock 10 minutes before market close? Now, I might have read the fundamental analysis wrongly in a hurry. I mentioned the dividend yield was 8% plus. But today when I checked again, it is not showing 8%, so this might have been a mistake. In a hurry, I was submitting it just before market close, but the key signal came from Q Finder. I looked for stocks at price extreme low here. Looked for stocks at price extreme low, giving a breakout setup in daily. And you can see it was inside a triangle pattern, very narrow range, that in this case also gave rise to a squeeze, and just on Friday a squeeze release. This is Q squeeze, not the traditional squeeze. That is a volatility squeeze. And those are very low risk opportunities to buy. In this case, we also had a weekly trendline support. And as I have mentioned repeatedly, this is one of the most reliable and one of my favorite setups when a stock has weekly support and daily breakout. So weekly support provides longer term support. Daily breakout shows bulls are regaining control. And in this case, we had a very bullish close, or at least as of this time, it was looking very bullish. We may look at AT&T chart as of the close. Why don't we do that? Yes, indeed, very bullish close on Friday. Very clear breakout. So it gave me a breakout setup at price extreme low. It has reasonable dividend, very well known stock. And this is how I find longer term investment opportunities. And I did take a long position on AT&T on Friday. I shared it also on the graduates club chat. The people who attended the master classes, they are in a chat room, and when I shared it, I noticed another gentleman, thanks to him, Ellis. Very difficult to get successful traders to share their ideas publicly, but Ellis did share a stock, and I liked that stock as well. That was AGNC. He shared it on the chat. I noticed it just 5-10 minutes before the market close, and I took a position in that stock also. Let's look at that. AGNC. You will notice it has many similarities with AT&T. It means we can apply the same concept to all the stocks. AT&T is a telecom stock and AGNC is a real estate stock. There are similarities at the industry sector levels also. Both of them are in defensive sectors. Both of them have dividend yield. AGNC of course has much better dividend yield, 10% plus. Both of them are at price extreme low. Both of them broke out of triangle with a very bullish shape candle on Friday. What AGNC does not have, but AT&T had, is a trend line support in weekly. AGNC does not have it. However, it has much better dividend yield than AT&T, and real estate sector is starting to improve. That is what we could find from Q Edge. Let's look at AGNC and AT&T's fundamentals also, and then I will look at their industries. Now in Q Vital, I have the universe of stocks I'm interested in. There is no point in trying to find trades from the entire USA market because we are probably not going to buy it. Regular traders, experienced traders are only going to buy liquid stocks, and I don't want to create that list every day. So I have saved it in the universe. I have calculated a scorecard of the stocks. Let's look at the scorecard. Look at value stocks. Let's look for AT&T. Let me sort by symbol. AT&T. Undervalued stock. Let me change the color. Undervalued stock secondary valuation is also bullish, has a 4.7 dividend yield. Here I can see I'm looking at the color coded scorecards insiders are buying. That may be a consideration for some traders. For me, that it was undervalued, has a decent dividend yield, and a beautiful technical trade setup was enough for me to buy. If I check its industry, let's do that. The industry was very weak earlier, the integrated telecom services. Now it is improving, has some acceleration that has enough reason for us to look for buy setups, and AT&T gave one on Friday. And AGNC is also looking great. Let's look for AGNC. Great valuation, strong earnings quality, and 10.9% dividend yield. Here also insiders are buying. The dividend yield itself was reason enough for me to buy, and this is in real estate sector. Let's check its industry. Here also we have an industry that is improving. In fact, it has better industry score than AT&T's industry. It's among the top 20%. Both are buyable. Both these industries are buyable. Both has dividend yield, and both have breakout setup at price extreme low. That is how you find low risk buying opportunities at low price that can be swing trade, of course, but could be also longer term investments. And these are well known stocks. Now let's carry out a top down analysis. I have some time now. Let's do a top down analysis. Well, before that, let's look at one more stock idea that I shared recently. AT&T is one I shared on Friday, but let's look at a semiconductor stock, Micron, that I shared on Thursday. You will see how I carried out the analysis. I shared it at 3:48 p.m. Eastern Standard Time, so just before the market close. So I ran Q Finder, and then I carried out the complete 360 degrees analysis. You could do top down or bottom up. If you did top down, you first find one of the strongest industries. Semiconductors was the second strongest industry and one of the top 20% most accelerating industry as well. So the industry was telling us that it was time to buy. The industry was up by a massive 3.8%. That is a large percentage gain for an entire industry, especially when the industry has so many stocks. There are many semiconductor stocks listed in the USA. The industry was telling us to buy. Then I found Micron. How I found it? I found it as a diamond setup using Q scorecard, undervalued stock with high earnings growth, high revenue growth. And we had fund accumulation. The stock was up by a significant percentage, and a massive 97% of peer stocks were up. Just before the close, I am sharing this. And I found Micron. Weekly backdrop was still magenta, however, it had a bullish indecision at the bottom. In the daily, it displayed a bullish headwind, created a false downside breakout at the watermark created by that bullish headwind. By the way, a swing trade taken at the bullish headwind or at this candle when we had a small dip and price started to go up again. Both of them had given profit. We could exit the trades taken at this and these points using the headwind reversal signal or the first bullish signal after the headwind signal. And then we had a false downside breakout. We wouldn't buy then because there was a trend line resistance, and when I shared it on Thursday, it broke out of the resistance. So it gave a valid breakout setup. And remember, a while ago I mentioned that we can always keep an eye on the jump thrust low. When it hits both jump thrust low, we are starting to look for buy setups. And on Thursday it came. It also gave a Q squeeze release. And we had a bullish reversal at price extreme low at this point itself. So Thursday we could buy, and I shared in the Graduates Club live chat that I took a long position using short put, and I shorted the 75 strike. Earlier there was a trend line support in the weekly chart, and the trend line support was at 75 price level. So I shorted the put at that support level. Weekly supports are even better, and volatility also would be in my favor. Because I shorted the put, that meant I was ready to hold the stock for longer term if I had to, and I had that confidence because it was and is a diamond fundamental setup with undervaluation, high earnings growth, high revenue growth, plus with fund accumulation. Let's see how Micron closed on Friday. Micron initially tried to go down but recovered, closed near the high of the day. So that is a very bullish shape candle. And the fact that it tried to go down and recovered is in fact more bullish in some ways because it stopped out weak hands. I had a short put 75 strike and my position is already in a small profit. Usually I book profit at 50% of max profit for short put positions. So Micron was a stock I shared on Thursday working well, and on that day the same gentleman, thanks to him again, Ellis, shared another stock in the same industry, and I thought that chart looked better. And I wondered why I did not find the stock, and later on I realized why. I have a stock universe that I use every day, that is mid price liquid stocks. Micron was there, $78, but Qualcomm is not mid priced in my universe. It was $159. It is under $157 now. That's why it was not in the list. That's why I didn't find it. On Thursday, this also gave a very bullish signal. I think there was a trend line resistance that was broken by Qcom on Thursday. So Qcom and Micron, Qualcomm and Micron, both gave breakout long setup on Thursday. Both recovered very nicely on Friday, closed bullishly. Both are looking good. Why I said I liked Qcom better because once again here the same pattern that we saw in AT&T. Weekly support, trend line, and daily breakout from trend line. Beautiful, powerful setups, and Qcom had that, but that's fine. It's not a stock in my usual trading universe. I didn't trade Qcom, I traded Micron. So if we are interested in this kind of setup, we could carry that analysis out using Finder. Let's do that. Why don't we do that? Let's look for stocks. Go to weekly Finder, bullish. Let's look for stocks that are touching trend line support. And there are 16 stocks. Let's look up those let's look up those stocks from daily interval and see how smoothly I am carrying out the analysis and I see there are 4 breakouts. So these exactly 4 stocks have daily breakout, weekly trendline support. Let's look at them using Q charts. I'm reading the ticker symbols from the top here. This is LXP, has a breakout in daily. Daily has a very narrow range, small breakout, not closing much above the trendline resistance, but breakout nonetheless with a bullish flow. Let's look at its weekly daily. Weekly has trendline support. However, it is a bit too high in the price level in the weekly chart. It's not a stock I'd like to buy. Compare this with AT&T, Micron. See the stocks that I like to buy, and that depends on the trader style. Some other traders like canceling traders may be perfectly alright to buy a stock like LXP here, which is breaking out at price extreme high. And using Finder, I could look out for breakouts at price extreme high also. Canceling traders could do that. I prefer to look for breakouts from price extreme low, but it is perfectly valid technique to look for breakouts at price extreme high. It's just a difference in style. I will not personally look to buy a stock like LXP. So let's close it. Let's see LXP, close this one. Next one, LNT. It's an energy stock, seems like Alliant Energy. It is also at price extreme high, but it is looking bullish. Let's look at weekly daily. Not my style, but other people may trade it. The analysis is important. Q allows all kinds of trades. It has weekly trendline support and it is about to break out from weekly trendline resistance as well. So not only daily trendline breakout, but weekly trendline breakout as well and weekly trendline support as well. So that's certainly a strong stock, and if you see the daily, it has a very nice cup and handle pattern. Very nice cup and handle pattern. That may be another reason to buy. If it is a growth stock, then it may meet the cup and handle breakout pattern that can slim traders use. Let's close it. XPRO. This is a stock I like to buy. Very narrow range move for several days. In fact, 4 out of the 5 days of the week moved with doji-like candles in decisive shape, and Friday a decisive breakout of the trendline resistance. Not very far above the price extreme low. Let's look at it using weekly daily. Very nice. Weekly has trendline support. Remember, that's what I looked for using Finder, using a few clicks. Weekly trendline support, daily trendline breakout. Now we see it has a weekly trendline breakout also. That's even better. So XPRO. Why don't we carry out a fundamental analysis of this stock? We are doing bottom-up analysis, finding technical setups first, and let's see if XPRO is already in the liquid mid-price stock list. XPRO, no. Okay, let's carry out a fundamental and PR analysis of the stock XPRO. While Vital is calculating the scorecard, let's go back to the remaining stocks. I'll come back to the fundamental scorecard and check its industry after scorecard is calculated. For XPRO, next stock, that's also looking great. BKU, Bank United. Financials was a strong sector and it seems to be a bank. Let's look at it using weekly daily. BKU. Once again, just what we looked for, weekly trendline support, beautiful bullish candle in weekly, both in color and shape, outperforming the market, very nice breakout from a sideways range. And the breakout happened with very powerful momentum signal, that is big move up 3 with bullish pressure, bullish U-turn, high volume. It was in a squeeze as well. Whenever you see this pattern, it doesn't have to be series of reds and then only one green. When it is red, red, red for many days, maybe in between there is a green dot or yellow dot. Most likely it is in a squeeze, and using the custom menu bar, I can check it out with a single click. Yes, it was in a squeeze and now it broke out of the squeeze. So we could look for BKU as well. Let's look at the XPRO's fundamentals first, then we look at BKU's fundamental. XPRO fundamental scorecard is here. Overvalued, however, high earnings growth. Q systems and techniques allows us to buy that because it has high growth. And in fact, it has accelerating earnings growth for 3 quarters. No, not 3 quarters. High earnings growth, but accelerating from the previous quarter. And it has very nice revenue growth as well. 97% of peer stocks went up. Oil and gas equipment and services industry. If I check out the industry scorecard, very strong industry. Of course, energy stocks had been strong for a while. Very strong industry and the fundamentals are great. Very nice breakout. And the other stock was BKU, a banking stock that was giving a nice breakout as well. Let's see its fundamentals. What I'm doing is aligning forces from all the levels. And another stock Ellis actually shared in the graduates club, and later on he commented that he did not take a long position. A well-known stock, used to be a very kind of high growth stock earlier. I think IBD listed it for many times. Teva, pharmaceutical stock, and he shared it. He found it as a breakout setup and a gap up setup at price extreme low. However, there are multiple trend lines not very far from the current price. That's why I thought it was not as good looking as Micron was on Thursday, Qualcomm was on Thursday, or AT&T AGNC were on Friday. However, having said that, if we wanted to look at its weekly daily charts, let's look at that. We'll complete the 360-degree analysis. And there was another reason not to buy Teva. It was right at weekly trendline resistance. And if you follow the Q charts, you know by now that it's not useful. In clearer terms, it's not profitable to buy a stock that is just below trendline resistance. And this is one case where buying at a higher price is actually better. If you think price is below trendline resistance, you could buy here, but in fact, if it breaks out above trendline resistance, it's a higher price, but buying at a higher price in this case is better than buying at a lower price. And you would have noticed that if you follow these trendline resistances and supports for a few months. So that was another reason not to buy Teva from technical points. Both weekly and daily had resistances. The weekly resistance is just above Friday's close. And I think he mentioned Teva's industry was also not strong enough. Now let's go back to BKU's fundamentals. This also had a nice breakout setup in daily with weekly trendline support, medium valuation, not high earnings growth, however, steady earnings growth for 3 quarters, 3 years. Funds are accumulating. Very high, 98% of peer stocks were up on Friday, regional banks. Let's look at the industry scorecard. Very nice industry. This is the kind of industries I like to buy. It's a turnaround case. Earlier, the industry was weak. Now it strengthened and became one of the top 20. I always like to buy, usually only focus on the top 20 industries or top 20 most accelerating industries. And if you are doing it in real time, as I do, you would focus on the real time columns. And now it is market closing hours, so we look at the 1 day period. So very strong industry. Fundamentals are good enough, you may say. However, when we have 59 peer stocks and the industry is so strong, before buying BKU, it always pays to do few more clicks, takes a few more seconds or minutes. Very strong industry. It was weaker earlier, turnaround industry. These fundamentals are okay, but why don't we look at the 59 peer stocks? And BKU had fund accumulation. Let's look for other stocks accumulated by funds. We have now 42 stocks, and I'm reading the statistics from here. All 42 were up, and that's why the fund accumulation criteria is important. If I refresh, total 59 stocks, very small percentage, 2% are down on Friday. But if I apply fund accumulation, performance improves. 100% stocks are up. That's why fund accumulation smart filter is useful. And let's look for undervalued stocks. I am left with these stocks, and several of them went up by more than 1%. Let's see if any of them had a breakout. I am now using Q Finder to look up signals and setups for these stocks. None of them had breakout. However, some of them had flow setup. So I like to check them out. Let's look at them. And this is how we are finding the best of the best stocks using not only fundamental scorecard of one stock but doing a proper and complete peer analysis. Key, this is KEY, has a bullish flow but just below trendline resistance, not going to buy, close it. HBAN, again I am reading the tickers from here, has a bullish flow, however just below trendline resistance. Remember, just now I mentioned this is one case where buying at a little bit higher price is better, just below trendline resistance. So next week, if it can break out of the trendline resistance, that will actually be a better buy than buying it on Friday. Close it. FNB has a bullish flow, however just below trendline resistance inside a triangle. Once again, if it breaks out of the triangle, that will be a good buy next week. VLY, once again bullish flow but below trendline resistance. Close it. UBSI, bullish flow below trendline resistance. That means we could add all these stocks to our watch list. RF, regional banks, no, regions financial, regional banks, but regions financials. RF is actually coming in a squeeze now. It may break out of the squeeze in a narrow range just below trendline resistance, has bullish flow, may break out next week. Close it. So we didn't find any trade setup that was good enough like we found in BKU. Was it BKU? Let's check the stock again. BKU. Okay. No O. There is no O. I type BKU.O. It was BKU only. The BKU stock is breaking out, and now we saw all the other stocks that funds are accumulating. This is the only one that broke out first, and the stock that breaks out before others in the same peer group with very high momentum tends to be the leader. So we found a leading stock in this industry that is very strong now, and this is fund accumulation. That's how we find best of the best stocks using live analysis. We are near 1 hour point. Let's end today's session here. And I keep on saying every market recap, and that is true if you followed the trades I share publicly, and that is true if you are disciplined in following Q analysis. And I see Ellis is doing an excellent job, at least based on what he is sharing publicly. And I brought this point out to highlight one thing. Q systems is very powerful because of the underlying concept, that is aligning forces from all the angles in real time. But it is only good if you follow this. If I follow this, as I share my ideas publicly on the forum, the ones I share, I always say, does extremely well. I make a lot of money from them in percentage terms. And if I am taking trades that are not worthy of sharing in the forum, but I'm still buying them, second guessing myself and buying, or maybe based on some news or something, they actually end up eroding some of my profit if I take them. The more days pass by, I take less and less of those trades. I only like to take trades by asking this question: is it a trade I would be ready to share on my forum? And if the answer is yes, those trades make me profit, whatever be the market condition. If the market condition is not appropriate, the Q concept and technique will keep me outside the market. But usually in every market condition, using the Q setups techniques, I find a trade setup, usually almost every day. That is what I wanted to mention. You have a very powerful system and technique, not just the system but the technique. But if you ask yourself this question before taking a trade: is it a trade I would be willing to share publicly before knowing the result? If the answer is yes, then most likely we'll also make a very nice percentage return, whatever be your invested capital. With that, let me end today's session. Thanks a lot. See you next week, and trade profitably. No reason not to do that. Thank you.